You're good there? Okay. June 7th edition of the Chat Room Podcast. I'm one of your hosts, Michael Reed. This is Albert Jones. We're going to talk to you about a little stock market news and what's on our minds this week. Before we begin, all opinions expressed on this podcast are solely the opinions of Al, Michael, and guests and do not reflect the opinions of We Are Stock Traders. This podcast is for informational purposes only and should not be relied on for investment decisions. All right, so I guess before we begin, me and Al were talking, and Al had a I'm sorry, I have to out you. I'm sorry, but Al had a trade on J.P. Morgan that we talked about.
Yeah, we did.
And you told me it was going to
114.
Or like 100, like that. And it started at what, 106?
106.95, exactly.
And so you said it was going to 114 or down to 100.
Yeah.
But then you told me you got out early.
I did. I got out at what was it, 109. I want to say like 38, something like that, like 109.38. I got out like 2 days after I got in. Terrible.
Right. So when you haven't, see, I would just suggest you having, like, this is where my website does come in handy. Like, even though people are like, oh, how come you write all that stuff for free and you do it? One, I get all the information that I wouldn't look up probably or put it in like some type of readable form if I didn't have the website. But two, you have that investing journal which like holds you accountable. So if you had to write down, like, I'm going to sell JP Morgan now for 109, you probably had to write down like what I got scared out of it.
That's exactly what it was. So here's the scoop on me. So I'm primarily a day trader, and I'm just recently, I take swings every once in a while. It has to be something really, really interesting to make me want to swing something. So actually, Michael, he actually gave me the idea. We were like talking about it or whatever, because like we were talking about all the banks, and it came up, and he actually gave me the idea, and I took a look at it, and I'm like, oh, this thing looks, it's kind of like in no man's land. You know, it's like 50-50, and it like pulled back a little bit. So when I was looking at it on my charts, it pulled back to like the lower days, and then it started to go up, and then it came right back to the same spot. So I was like, yeah, I'll just take some. So I took some, and then I took about 100 shares, and then it started to go up a little bit. It went up about $1, and then I took off 50, and then it pulled back again, and then I added the 100, and then so I stayed with the 100, and then like the next day, it gapped up. It was like 109 something, and then I sold half, like as soon as the market opened, and then I let the 50 hang around a little bit. I didn't really like what it was doing. I should have just stayed in there, and I kind of got scared out, and I just sold. So that was me. Like, I have to get better with my patience.
Yeah, which is fine. It's just
just not used to being something that I do. So
well, it's a good example for people to like just say like people. It's harder than it looks, and I just want to give other people advice. That's why you should have a journal, so you can have these and you can write down your reasons for why you think it's going up. And even if you do something like this now, you can go back and be like, oh yeah, this was a setup similar to J.P. Morgan. I got out early.
And it's funny because the first thing I would ask somebody who did that is like, why did you get out? And I don't have a reason. And it's like, yo.
So when you have to write that down, it's like,
I got to hold myself accountable just like I hold other people accountable. But it's a really good lesson for me to know, like, to basically just stick with my plan. That's something we talk about all the time. A lot of things don't go well when we just deviate from our initial plan and just, do something different. So that's just a lesson for me. And, for anybody who's watching or listening who, might have been through the same thing, it's just something to know that you're not the only one. Trust me. Like, we all do it.
Yeah. I haven't done it lately because I haven't moved anything, but I've done it as recently as like a couple months ago.
But I actually enjoyed that, though, to be honest. It was way more – it's less stressful than day trading. Like, day trading is very, very stressful. Like, so to just put your order in and just, pretty much just monitor here and there, and, you could do other things or whatever. It's way less stressful than day trading. So
yeah, I guess the only thing I got wrong was when I sold out of Facebook after the hearings, and it went from like 165 up to like 190 now. But when I look back at why I sold
It just
it,
made all-time highs, right?
yeah. But when I look back at when I sold it, it was like, oh yeah, it's increased risk. I took off half the position, and I think the reason it went up was because they had better than expected revenue, and they didn't say they're going to raise their expenses too much. So it's something I didn't know was going to happen. So I was like, all right, well, I'm fine with that. Like I had a reason for why I sold it. Something else happened and it went up. I'm still in it. Like I just sold half my position. So I was like, all right, we're fine.
I mean, that's okay because you could take that money and put it somewhere else.
But it's tough when you look back and you're like, why did I sell it? You're like, I wrote I was scared. Yeah,
I know. I mean, that's pretty much the only thing that you can do. And I was just watching a video on my way over here to the offices about, letting your winners ride and just, trying to keep myself in that mode of knowing why you put it on in the first place. And that's the thing. Like, it's not about what it's doing right now. It's about why you put it on and where your targets were, pre-entry. And, just stick to that. And, obviously things change. Sometimes it does things unexpectedly. Like, it speeds up. It might, hit a particular number before you anticipate or, stuff like that. So... And, we talk about that, too. When things start to move a little too fast, we get scared. So those type of things happen, too. But, like, if things are pretty, staying the same, just stick to it and just, ride it out.
Yeah, because I started adding the winners, like, last year. I wasn't putting them on the website because I wanted to test it out before I started telling other people to do it. And they're like, dude, what the hell? It's scary at first, but then when you take a step back, you realize, like, I know these companies very well.
Right. And that's another thing.
Yeah, so you kind of understand the chart and when to add.
Right.
And it's been so far so good for me, especially I think one of the big ones I got was Take-Two, which came down to like 100, which I thought was crazy. And I put that out there, and I think it's back up to like 113. So I've done a couple other ones.
Right.
It's just waiting for it to pull back. And a lot of times I probably already took profits at some point. Then when it pulls back, I'm really just putting the money back on that I took off.
See, with me, I'm like the opposite. I guess so I'm good at scaling into a position, but I'm terrible at adding to winners. Like I always add at the wrong time.
Well, it's harder for you because it's your day trade.
Well, yeah, but the concept's the same. So like when you add to a winner, you basically want to add to something that's pulling back.
Yeah.
But like with me, it'll start to go, and then I'll just put on, and then it'll pull back, and now I'm like double the size at a higher cost average, and then it pulls back, and now I'm down in a position, and I get freaked out. Yeah. So it's like
I think it's unnatural because you feel like you're being greedy, like I made money, what am I doing? It's
exactly.
Like, no, this company still has room to run. Like
at
least for the long term trade investing, it's like I had this thesis of why it's going to go well. But then when you keep reading about it and you keep seeing like management talk a little bit more as the future goes on, you're like, holy crap! Like, I just think this company's just scratching the surface of how big it could be. Absolutely. But some companies I won't add. Like I know the two biggest positions I have is like Chegg and Nvidia. I won't add to them because they're already
it's just so
oversized.
Much. I was about to say it's just so much. You're like up so much on those positions. It's just like
it's really because I kept saying Nvidia 220. Like I was telling people who asked me, like, when should I buy Nvidia?
What is it,
220.
Like 260 now?
Yeah, like 220 was the time to buy it, like all the beginning of this year. But I wouldn't add to it because it was already like 10% of my portfolio. So I can't put more money in this thing. Like,
right.
As much as I know, it's probably going to keep going.
I was about to say, I think it's going to, something else that I missed too, that when we were talking about in the video, the AMD.
Yeah, that thing ripped.
It's been going up, yeah.
I wouldn't have. That thing, well, we're looking at the chart. It went straight from 10 to 16?
Yeah.
Oh, yeah, I got like 13 to come out. Because it did keep like the last year between 15 and 10.
Yeah, it was just hanging around, and it couldn't get over like 13 or whatever, and then finally did, then it pulled back. And like I think that 16, I think right here is the all-time high or whatever, so people just taking some profits. This thing's probably going to go to 20 in the near future, so
I think
that's something. It's going to pull back because, like you said, it almost doubled in like a month or 2 months or whatever. So
I read that conference call. I can't remember off the top of my head. I know they were doing well because I was like, all right, NVIDIA's going to do well. But I can't remember off the top of my head like what in particular really pushed it. I think their margins were actually better. I know that was a concern last year. I think they're getting that that in order. So
I remember.
and I think
when it was a penny
cryptocurrency,
stock.
people were just using it for cryptocurrency.
I remember when it was $2. It was a penny stock, and everybody was shorting it, and it just kept going and going and going to like 10, and then it was like hanging around. Then it got over 10, then it was like hanging around, like between like 13 and 10, and then now it's finally breaking out. But I think the reason, because most of these like the semiconductors or whatever, but like most of these stocks that travel in packs, like I think the success of the NVIDIA is really what's driving the AMD, because there are competitors or whatever, but I think a lot of the sympathy more so. It's a good company, but
I just think there's enough in the market for two of them because
Absolutely.
everything's using chips now.
And then like you said, like because NVIDIA is $260, like people don't have that kind of money.
Yeah.
And you got $16. You know what I mean? So
yeah,
like
buying AMD.
Exactly. So,
because I think I seen on like a Robinhood type of like survey, like what's the top 10 owned stocks. And Robinhood is mostly millennials.
Right.
And I'm pretty sure AMD was on that list.
Absolutely, because it fits everything that you want. It's cheap. It doesn't have a huge float. So like it's pretty steady. It's not like wild or anything. And it's a good company, and it's a steady trender. So I think it's one of those things that when you don't have the capital to get some of these higher price stocks, but you're still looking for a good company in that field, this pops up a lot.
Yeah. Yeah, that thing's been straight up. So congrats to everyone who has AMD, especially if you're holding it, because if you are, that's tough. What I wanted to say was because our friend of ours, Floyd, just put up a post about how car loans are like car payments are like all time high, and it's been trending up like the last 4 or 5 years. And a big part of that is all the technology that goes in cars. Like I have a 2012, and I somehow switched up my keys, and now I have like the kid key, whereas I have to have my seatbelt on for the music to play.
Really?
Yeah, and I can't and it's like if I can set it where like if I had a kid and I gave them that key, they can't turn the music up, it's so loud.
Okay. Is that the one too where like if you have an accident or whatever, it, like turns your car off and all that stuff?
I don't know. It's a 2012 Ford Edge, and I have all the technology in the 2012. I'm like, I can't imagine.
Imagine like 2018, like what they're doing. Like
so I think that's driving up the price of cars.
Absolutely.
And even the used cars are getting driven up because of that, and that's why the loans are out of control. So it's really getting harder to afford a car. But for the stock market purposes,
speaking of cars,
for these for these chip companies that are all the technology going into cars, I mean, it's driving real like growth in the companies and higher share prices. And then you just pulled up Tesla.
I like this Tesla.
I
mean, like what it's doing right now.
The chart.
Yeah.
Because I guess he came out and said shareholder meeting that they're gonna make cash this year.
Yeah. I'm waiting to see this.
Yeah, he said they're gonna.
How is he gonna do it?
They said they're gonna rev up production. I guess they worked out the kinks, and now they can really put it into full gear. Like we'll see.
Yeah, but the thing for me was this level right here.
Was that 290 or 280?
Yeah, like if it can hold, well, like pretty much like 290, but I'd just say 300. If it can hold this, like once it broke under and then it came back over, we call that a remount. So it basically shows strength. Because usually when things break under, because it's a really, 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 it was a really strong level, like prior to breaking down. I mean, you know how many times in the last like,
and that's like year, in the last year.
I was about to say in the last year, it's as soon as it hit it just bounced every time, and then it finally broke through. Tried to get through, couldn't. Tried to get through, it couldn't. And finally it broke through. So if it holds, this can go back to 350s, 360s. Maybe you see this triple top breakout maybe over these 390s. It's a very strong possibility. So
I don't think if he gets the cash, like that, it's going to come down to production. I think they're going to have to raise more money anyway. So
it all comes down to him putting his money where his mouth is.
It might pop up there, but if it gets up there, I think some people are going to start selling, waiting for the next offering.
Yeah, but as long like with me is if it gets to like the highs and then it sells off, that's fine. As long as when it comes back to that 300 and holds.
Yeah, it holds that 300.
And then okay, once it breaks, it's good to go. So that's the thing, because usually when, like I said, when these things break these major levels, they fall for a while.
Yeah.
And
Because
this
it's
was like
holding over for a
I
year.
was about to say this was like a week or two.
Because
thing.
that's computers and people trading. Though. It starts with computers.
Absolutely.
People start freaking out.
Yeah,
Because when it ran all the way up, beginning of last year, people were just buying and not
they
conscious.
didn't know anything.
And it was in at 350.
Yeah, so, but I like it. If you look at like a weekly chart, and sometimes I'll do stuff like that, kind of what we talked about earlier, like these things, they'll break over the levels and they'll fall and scare the people out and then they'll go. So, you just got to open up the time frame and just to see like where it's coming from, like on a longer term.
Mm-hmm.
So, yeah.
And then let's talk about McDonald's, because that stock was up about 4.5% today on basically news of job cuts, which goes along with their plan to cut general SG&A expenses $500 million, and it's kind of sad that they're going to cut jobs and the stock rips. But
I know
this was something
that's usually how it works.
But this is something I was talking to my friends about when. It was around last year. It might have been 2 years ago when that fight for 15 was going on, like $15
an hour. Yeah.
I'm like, look, you guys want to fight for 15, go right ahead. What they're going to do is cut some of you guys off.
I was about to say, they'll pay people 15, but they're not going to be paying as much as y'all.
They're paying
two of y'all, one.
Two of y'all. Yeah. So what they're doing is now they're putting changing all the restaurants to what they call experience of the future, and something that's in there is these self-order kiosks.
I saw that.
I experienced this type of store in Canada at a bachelor party about 2 years ago.
Mm-hmm.
It was absolutely amazing. I know for a fact I spent more in there than I normally spend. And the company was saying that too, that people spend more because of experiencing the future. So they're doing that in America now. And in the next, they should have all the restaurants in 2020 will have like self-order kiosks. And then they have digital menu boards and table service. So it's a whole different type of. They're trying to modernize the brand. Yeah.
To like,
And then they also do delivery, which has been big for them. They do Uber Eats.
Uber Eats, yeah.
And if you know anything about Uber Eats, when you pull up the page, it puts it in order by how long it's going to take. And since McDonald's food is so fast, it's like a half an hour.
Mm-hmm.
And they've been seeing a lot of deliveries late night. People probably with munchies.
Absolutely.
Around college campuses.
Yeah, absolutely.
So I own McDonald's. I got it more or less for like one of the stable companies in my portfolio, but it hasn't been moving the last.
Right.
And I send these podcast topics to you like Tuesday. I'm like, let's look at McDonald's because it hasn't really moved. I wonder what the charts say.
Today.
And the charts pop.
Yeah. Well, it was banging off the 160, and it just once it hit, it gapped up, and now it hit 170 today. So that's really interesting. It's just funny, like, I haven't eaten McDonald's in a while. I got my reasons for that or whatever. But the commercials with like, the stars or whatever with the fresh meat,
the new quarter
pounders. Yeah, that's so funny to me. It's just like usually McDonald's doesn't really, do that. So they haven't done it in a long time. Like to really try to like the ad campaign to get people to believe certain things or whatever that they might say. So that's interesting. But I mean, it's working for them. Whatever they're doing. I don't know where this can go, but it looks like it's looks pretty good at the moment.
Okay, so McDonald's is good. I would move on to let's talk about Ulta Beauty because this is something.
I really like this chart. When you sent this to me, I took a look at it, and I like it.
This is something I actually sold.
Oh, really?
Lower, a lot lower, like around. I think I sold something like 220. Then I sold the rest like 210 because it was a smaller position. I'm like, let me just raise cash.
To get the money out.
And I knew it was going to break 190. Like that was my whole thing. Like 190 is the downside, 250 is the upside.
This is what we call a 1-2-3 pattern. So basically, it's 1, 2, and then 3, and then it breaks.
The wave pattern.
Yeah. So it's I like that. So it's like knocking on the doorstep at 260 breakout. So
they reported earnings last Thursday. Well, Ulta Beauty is the largest beauty retailer in the United States, if you don't know. They sell everything from cosmetics, fragrance, to skincare. And I also offer salon services. So last Thursday they reported Q1 earnings. They beat on revenue and EPS. The problem was that their Q2 guidance was lower than expected, but they raised full-year guidance. So I don't understand. And so it sold off initially after earnings.
It did.
And two, it did run up. I will say that.
Yeah.
And so the smallest thing would make people sell. Probably the computer started selling because they didn't see. They saw like the Q2 guidance versus what they had programmed, what they were looking for, and they probably sold it off because the next day it came right back.
Right back.
But I think this is a good retail. It sold off a lot. I think around last summer because people were worried about Amazon stepping in and taking some of their market share. But something to keep in mind with Ulta is they have a loyalty program with 28.6 million members. So when you have that type of data coming through, you know how to market to the consumer. You know how to get the products on the shelf that they want, and then you have that data coming from them constantly that makes the business easier to manage. And then they also, for a valuation perspective, is looking pretty. It's not as high as it was before. Now it's been sitting around this level. So the PE is around 20. The current ratio is around 2.4. That's because it has no debt. So it's in a solid place as a business. It looking at the chart, looks like if it can break out, it's going to run.
It's going to run.
It's a lot of support sitting up here at 260. What was that last year? The last time it was over 260.
Yeah.
So that's a level to watch.
That's a real important level. So I mean, next week we'll be looking for something possibly.
So we'll see. It's a really good business if you do check it out. And two of my friends are happy. These are one of the ones I sold and they held on to and it ran up.
Really?
And it's always now it's become a rule. Like,
so did they get in higher level or y'all got in
around the same time?
Okay.
And I was just like, I just want to raise more cash, so let me just sell it. Whatever, I take the loss. And they just every time you sell,
it goes up.
It rips. That one. And we can check out Wingstop because that's another one. That was the two I sold because they were smaller and they both ripped right after I sold them.
Wing. I remember when this IPO'd.
I don't remember the IPO. I purchased it. This is one of the ones where I wish I had a journal because I had a plan to purchase it like lower, and then it ran higher, and I chased it, and then it came back down, and I scared myself out of it, and I sold.
I know, and then it went up.
And then
and then you didn't want to chase it again because you didn't want the same thing to happen.
And it kept going. But at the same time, when I sold it, my friend didn't originally. Around we were in like probably getting like 26, and I was in at like 30. And I sold it, and he bought it and stayed in for like 34. Then got out, and I think we all got back in around like 42 or 40, something like around 40s. And then I sold it like it's smaller. I'm just gonna raise cash again, and then it ripped higher
Yeah, it's testing the all-time highs.
That's a good one. They do. I think a lot of it is they're starting to do delivery.
Oh, really?
And I think that's going to be
I've only been
push.
there like one time. You know, they got the one on 77 City Line, like the plaza.
Yeah.
That's the first time I've been there I've never been like prior to them coming like to the city or whatever. But I mean, their food's okay.
Yeah. It's a simple concept. I think when you have like a simple concept like this fries and wings, like you can't mess it up.
I was about to say, and that's the thing about it. It's simple, finger food. You know, it's not really complicated. Like you said, you can't mess it up. So
no, and it's a good time to. It was a good time to grab it because they're moving from like regional to like more national, and they're doing more international. So they're getting the bump from newer restaurants, but also same store sales because of delivery, and I think the business is doing better. And a funny story from that is so they had their call after I first bought it, and it was two things they said on there that really scared me. It was one, they thought they weren't seeing a lot of business. They thought there was a slowdown in business in Florida after Trump won because like Hispanic community was like scared to come out. I'm like, that doesn't make any sense. Like, really, dude. And then they also said like, yeah, because I don't know if you're familiar, but last year the tax breaks income tax checks got pushed back if you registered for the earned income credit because they did more diligence to make sure like
people weren't like scheming or whatever.
Yeah, so they pushed them back some. And they also said that was a problem too. I'm like, did people really get their income tax and go wings? I'm like, I don't believe you guys. And the next quarter it started trending better. I'm like, oh well, maybe they're on something.
Yeah, this is what I'm talking about though with the Wingstop. Like, well, this particular pattern that I see with IPOs, like they start out and then they go up and then
come down.
Yeah. And then they do like this cup and handle thing, and then they break whatever the level was, and they usually don't come back after that. It was like the same pattern that Facebook had, and like this is a really powerful pattern. So
because I think a lot of the times they come out and people are shorting them, and then it keeps buying.
absolutely.
But then the company comes out and says we're doing a secondary offering, and then it plummets because more shares in the market means your shares are less valuable. So
A lot of dilution.
Dilution happens, and then everyone starts short selling it, and then it kind of stabilizes.
Mm-hmm.
Because people start to see, like, all right, what is the business actually doing? Like,
And
we're
then-
not going to play the price game anymore.
Absolutely. And then once people start to buy it, the people that were short at the bottom trying to drive it into the ground, they start covering. And then, actually, this is a really good company anyway. So once it kind of gets a bid and, kind of gets his feet, on the ground, then it starts to get some air behind his back. And then it's off to the races. And that's pretty much, you know.
That's what happened.
So, yeah. So would you consider, like, getting back in?
No, I have enough restaurants I have McDonald's and Domino's.
Domino's I like Domino's.
Yeah,
I don't like Domino's like pizza, but like
I think I'm one of the few people who do.
I'm not a fan.
I heard a lot of people say, like, yeah, I don't really like the pizza. I wouldn't buy the stock. I'm like, that's fine. It's just I know it's convenient. That's what's killing. Like, if you have the users in a loyalty program and you can kind of communicate them and get that data and see what they like, you have an advantage. And then two, they do their own delivery, and they have mastered how to do it, and it's become a competitive advantage, especially nowadays because people don't like going out. People like ordering in. And so when you order Wingstop, you're ordering through or McDonald's is through like a third party. So the prices are sometimes higher.
Domino's is just Domino's.
Yeah, the prices are higher, so the margins on the actual for the business are lower. And then most people might not want to buy it because of that. But if you get Domino's, they have figured out how to really run that operation, and that becomes, like I said, a competitive advantage. And even I just posted this a while ago, like about Wingstop CEO talking about it. They asked, and it was asked him, like, would you do your own delivery? And the guy was like, no, I don't think you understand how hard it is.
I was about to say,
to have your own, to have your own people, and then you have to have those systems set up. Like, it's too hard.
It's too much. Yeah, I mean, but it's funny with Domino's. I always think about. So I work at Whole Foods and I make pizza. So that's the first thing that everybody asks me, do you have gluten-free pizza? And I'm like, no. And they're like, Domino's does. I'm like, well, what do you want us to do? Like, go to Domino's.
Yeah.
But, that's funny. But, I mean, it's a good company. It's been around forever. You know what you're getting with Domino's.
You want to pull up the chart? Because I asked you that.
What's the ticker again?
DPZ.
Jesus Christ.
Because I sold some at 250. Like, I got, like, it ran out.
I mean, that's.
And it looked like it couldn't get to 250 for a while.
I was about to say, I mean, I probably would have sold some at 252 because, like you said, it gets there and usually it pulls back, but it really didn't pull back far, and then now it's 272. Jesus Christ.
I don't know if there's. I need to check because I was trying to find. There's some restaurant news that came out because a lot of them started ripping this week.
I was about to say.
Because that looks just like McDonald's.
Yeah.
So I don't know if numbers came out.
Maybe it's just
something.
like the sector of like the restaurants. It's just everything's going like sometimes like it'll be a hot sector and then everything just gets hot and then they just if one goes first then they'll just find the next one and then they'll just find the next one and then next thing you know everything's hot and so.
This might be one of the times where the stock market just doesn't make sense.
Yeah, it's just a hot
it's not
sector.
On a lot of volume, it doesn't look like either.
No, it's
so
very low volume. It's under 1 million shares. So, yeah, it's very low volume, but like I said, you never know. It could be anything. That's the beauty and sometimes the scary thing about the stock market is, you don't really know what's going on. You just know that something's going on.
Mm-hmm. So, speaking of restaurant companies, we can talk a little bit about Starbucks.
Oh, yeah.
So, Howard Schultz, the executive chairman, is stepping down. He's probably going to make a run for office, maybe president.
2020, you think?
I have no idea. I mean, I want to say like he's kind of old. He needs to put a rush on it, but I don't know. And he has that clout.
John McCain was old.
He's been talking about it he's talking about politics for a while, and they are known for doing the right thing. So he might make a run 2020. I have no idea. But interesting fact was he was supposed to step down like May 15th. But then the incident at the Philadelphia Starbucks happened, and they had the training, so he stayed on for an extra month. So he's stepping down June 26th. I think the company's fine as far as long term. I think the U.S. business is slowing down. It's saturated, but it's going to have to make. It's going to. I would guess investor sentiment would change just like it did with Nike, whereas like the U.S. market was tough. And then all of a sudden, everybody started focusing on China. And then Nike ripped from like 50 to like 75 now. And I think the same thing's going to happen with Starbucks. But I don't know the time frame. But on the last conference call, this was something interesting said by CEO. Quote, per capita, coffee consumption in China is only about 1/2 of 1 cup per person per year. You compare that to roughly 300 cups or so per person per year in the U.S., and even more than that in Western Europe. So that explains why they're building like 2 stores a day out there. Like that coffee consumption out in China is a huge opportunity for it. If they can put the stores out there and the Shanghai Roastery is doing well, I think they have a chance to really capitalize on that and really change the story. I know they had a China Investor Day in May. I'm not exactly sure how that went, but maybe Ron knows. So if Ron can let us know, it'd be great. Yeah, it's just a matter of time with this one, I think. I think you're looking at the chart, and I think from my recollection, I think always around like 54 was always like the low.
Yeah, about 54.
And then like the high was like 58. Always like, kind of stayed in that range.
Around. I was about to say, it's not really been doing anything, the last few years. It's just going sideways, realistically. So
I think it's one of those things, like this would be a stock, like, oh, if I was going to buy a stock for a kid or a niece and nephew.
You pretty much know this is what I call like the good floor. Like, you say like an athlete, like, all right, what's his ceiling? You're like, his ceiling might not be like really high, but his floor is okay. So like basically where they're at right now, you're fine with. So even if it doesn't go higher, it's probably not going to go lower. So if you just want to collect the dividends, then you'll be okay with that. And it's a higher probability that it goes higher than it goes lower. So those are one of those. It's like a safe bet, basically.
Yeah. Once you buy and forget.
Exactly.
There's a couple of global brands you just put away. Like,
absolutely. You're not looking for any growth. You're not looking for anything major. You just know that it'll be there. And you just collect and just sit on it.
Yeah, but I'm not into that. I need my money. So you guys got to grow, or you're getting out of my.
But that's why you say like a kid or whatever.
You're getting out of my portfolio if you're not growing. That's.
So you don't mix it up that much.
I really only mixed it up with McDonald's and Home Depot.
You don't own Apple, do you?
I see. That's like my forget it thing. Like it's not in my like main portfolio. It's like the one I had when I sucked at trading.
Right.
And I just had Apple because everyone had Apple, so I do have it. But that's a part of it too. Like right, like there was like second and forget it. Like I'm not really,
right. I know you probably were surprised at where it went because I don't know, it kind of happened quick. Because when you think of Apple, you think of.
But if you look at the chart, I think it didn't move for like 3 years before it took off.
Yeah, that's what I'm saying. So it's like those are one of those things that you don't expect it to do that, and then it does that, and it's like, whoa, where'd that come from? Yeah, like you said, for a while, it was just like hanging around like 90 or something. And then next thing you know, it's just boom. Now it's like almost 200.
Yeah, because I got in, jeez.
I remember my friend got in like around here, like the 95-ish or whatever. He still got it. So, yeah, and it just started going like.
Yeah, you know what? Warren Buffett started buying it. And
I was about to say that helped.
People start chasing.
And he's adding to his position. He just keeps adding.
Yeah. So I mean, I don't really. I mean, I read the conference calls, but I don't. That's
like
kind of my side.
Exactly. You don't really have to worry about Apple.
Speaking of Buffett, he actually tried to buy a stake in Uber for $3 billion, and I guess the story is that Uber thought that was too much. They wanted him to buy it for $2 billion, and
I wonder what the stake was. Like
how much it was worth.
Yeah,
he got a good discount.
Oh, absolutely.
Yeah. So I think they just didn't want to give away that much because they just gave SoftBank like a $3 billion stake,
Right.
and they gave them a discount, and you got Warren Buffett coming around. Then you got 10% of your
And then they're talking about going public next year.
yeah,
So
you got 10% of your float out there.
mm-hmm.
I mean, on discount. So
That's gonna be interesting how that plays out if they do decide to really go public.
yeah.
I wanna see
wonder
how
what
it
made
works.
Buffett look at that, because I feel like
It
he
seems
doesn't
like something he wouldn't do.
Yeah, he doesn't like
it's-
technology.
I was about to say.
Is he just getting itchy because he had a bunch of cash he's sitting on? Like, I got to do something.
Yeah, but that's not even usually something that a type of stock that he would think about purchasing, or a company. Like he doesn't usually buy companies like that. He doesn't buy group companies.
You know what he did? He does like the CEO a lot. He does value management, and he's always been on the record as a big fan of the new CEO.
Or maybe he sees something, down the road that it might be something phenomenal, once it does go public or whatever the case may be. So who knows?
I don't know. See,
I
maybe
can't see it.
maybe you got to wait, look at their financials.
I just don't know how they're going to make money.
Right, from what I know, the only way they can make money is if they come up with the autonomous driving solution first. Because if anyone else does it, they're going to have to license that technology, and then that might not make them money. Or that whoever does it, like say Tesla's trying to do it, if Tesla does it, they're just going to run the Uber service. They're not going to license anything.
Yeah.
So I don't know what the end game is for Uber, and maybe if I don't have the access to talk to management and see financial statements, so maybe that would change my mind. But it'll be interesting to see if it comes public, does he starts buying it or?
Yeah. Well, I'm pretty sure if he does, he's definitely going to get it for way cheaper than whatever the shares is going for publicly. So he's going to be in the money regardless.
Yeah, he might try to buy it right before
I
it
think
comes
so.
out.
I'm pretty sure.
All right, so the big news of the week, at least on my timeline, it has been this Tulsa real estate fund. I personally kind of ignored it until Friday because I seen all the marketing and I just assumed it was a scam. I mean, that's probably a bad way to look at things, but everything I've seen on social media when a bunch of marketing has to do with like financials or money, usually you start asking questions and things don't add up. So it actually is a Regulation A Tier 2 real estate crowd fund. It's not an IPO. I don't know why people keep saying it's an IPO. It's not. There's no public shares.
Pretty much like
it is a
venture
private
capitalism.
company. It's like a GoFundMe, but you get a return.
You get a return.
Some of the red flags I found. So they have SEC documents, and I think some people. It's kind of sad that you can still. It's still 2018. You put stuff in a book and people go read it, and so the CEO Jay Morrison is telling people to go read like the SEC documents, and he either knows that people won't read it or people don't understand it, because if you look at the SEC documents, they have no properties in the fund in $15,000, but they do have $15,000 in cash, which is to me is a red flag because you're doing all these again video shoots and you're talking. And he did an interview talking big money, but there's no property and there's barely any cash in the fund. They hold your money for at least a year, and because it's a private company, you cannot sell your interest without their approval, and they don't have to buy your interest back. So you might give them a $500 investment. You might not ever see that $500 back. You might have to wait for your 8% return to add up for you to get your money back. Right? Yeah. And you think 8% return, it takes 13 years to get your money back.
You know how long that's going to take?
And that's not including the fee, so it probably takes longer because there's a 5.5 asset management fee.
Probably talking 17 years.
Yeah. Management fee, which if you know anything about investing, like 2% is deemed like really high. Like the best of the best get 2%. So my concern with this is that people will get burned and then not invest in anything else in the future. And I know some people were like, I know some person, at least one person that was on like one of the Facebook groups I was in, was talking about they didn't want to talk about it because they didn't want to be like, seem like a hater. I'm like, well,
yeah,
you should tell people this is the bad investment.
So I look in I was a lot of his posts I follow him on Instagram. So a lot of I look at his comments and it's a lot of people asking questions. Oh, I put my money in, it's still pending, XYZ. But to his credit, he's answering the questions. Like I see him adding the people, tell him to go to this page, tell him to go to this, do this. XYZ, emailing people. So, it doesn't seem like to me, the way his interaction is with the public, that it's a scam, but it does seem like a possible, like, I don't want to sound like,
Yeah, it's possible.
a possible bad investment.
I think best case scenario,
depending on what you're looking for.
Best case scenario is if you're trying to like get a return on your investment. Best case scenario is a bad investment. To me, that's best case scenario.
But I don't have the information that I need to really make an accurate statement. So basically, for me, it's a wait and see game. Just to, these type of things. Just like he called it an IPO. It's not like we discussed earlier. But these type of things is one of those things where you don't always want to be the first one to get in. You kind of want to see what happens, wait it out. See, eventually, like, what's in the dark is going to come to the light. So if it's some type of scam going on or, bad practices or mismanagement, that stuff's going to come out. So, and if it's not, that stuff's going to come out too. So, whether good or bad or indifferent, time will tell whether it's a good idea to invest. So if I was considering possibly investing, I would wait.
There's no need. You don't have to be first in line. And the two things that makes me think it's a scam, and if I'm wrong, I'd be the first to say I was wrong. But two things is, one, they don't have any like institution or like big money investors. To me, you would think you would at least get that to begin with. Like you would
at
least get one or two.
I was about to tell you, would think that would be what they use to get others. Like, I got XYZ to invest $1 million or whatever.
Like, even if they weren't targeting them, you would think someone would approach them like, oh yeah, this is a good investment. I want to do this. All these black banks, and other wealthy black folks. You would think somebody would do it, right? And you don't see any of that. To me, that's a red flag. And then two, well, if you look at the documents, Jay Morrison has control over everything, all the investments, the employee compensation, including his own, and material related party transactions. So what that means is, for related party transactions, when I read that, it means he has the right to buy a property and then sell it back out of the fund to himself or someone in the company. And why would you put that in there? It just makes no sense to put that in there unless you're trying to do something. So to me, it doesn't make any sense. I would wait a long time.
A long time. I was about to say, not like a week.
But two, if you can't move your interest, it makes no. If you want to make a donation,
I was about to say,
that's fine. But I would never do this as like an investment. Like, I'm going to make my money back. Like, I don't think.
At the minimum, I would wait a year. At the minimum,
I would wait multiple. You got to see the properties.
I'm saying I would too, but just because the reason why I said that, the reason why I say that is because, according to the documents, you can't pull your money out for a year. So that will give me enough time to find out if somebody who put their money in tried to get their money out and was denied, or with some problems or things like that. So, because at the end of the day, like, you never know what happens. So, like, if you put money in to invest and you might need it and you can't get it back, that's an issue. That's an issue. Especially if the fund's not doing well. That's an issue. So,
and there's no properties lined up. Like, oh yeah, we thinking about like these 5 properties.
I was about to say, usually they have ideas of what they're going to do prior to even coming out with the project. And to begin with, like, these are what we're going to eye. These are the type of investments that we have lined up.
Or even like these cities we're looking at to buy the houses at. Like, something.
Yeah, it's
just nothing like that.
Yeah. It's nothing. Yeah.
Like, it seems like there's no plan. We're just going to get the money and we're going to figure out later on. Like, no, they're not going to do that with my money. No. You got to lay this out.
Just seems like they're going to get the money and flip it and then do whatever.
And this is not me being critical of them, or this is how I treat every investment. Like, I go through conference calls. I listen to see what management has to say. I look through their numbers before I make any investment. I'm giving them the same due diligence as everyone else.
Absolutely. This is your money, so you have to be that way. Like,
until I don't care.
Until otherwise, like, for me, like, in the investment world, things are guilty until proven innocent. Especially something like this. Like, if you don't have any type of history, any type of credibility, any type of statistical documents that lead people to believe that you A, can be successful, or B, you have been successful already. I have to look at it that way.
Yeah, but the setups is weird because if they're putting no skin in the game, all the other members are, but then we split the profits 50-50. Why are we splitting it 50-50 if you have no skin in the game? No. That needs to be like 90-10 or something more ridiculous. And you're going to get 5% right off the bat. So if they raise $10 million, 5% of that
they're close. I think they're all like 9.
Well, 5% of that is, what, $500,000 right off the bat? You get $500,000 before you do anything.
Nothing.
Yeah, no, you got to bring that down.
It's like a finder's fee or something.
Yeah, you got to bring that down. I don't know what costs you had before then. With all these, like, I guess, marketing and all that. That's not my problem. Like,
that probably was in the budget. I doubt it.
Yeah, it's not worth the $500,000 of marketing they did.
Yeah, absolutely not.
So
they're doing Instagram. It's probably
I don't know
free.
I don't know what cost that you had that you think you should get $500,000 right off the bat in your pocket, not to the fund, in your pocket.
Yeah,
so
before any kind of money is made or invested or anything, it's unusual.
No, it's just I can't imagine. Even if I even like the project, I can't imagine giving.
I like the idea.
Yeah,
I love the idea, but it's just kind of like to be continued.
Yeah, no. I would say right on the record that we will see this on 2020 American Greed one day. I'm on the record saying that. I'm
not there. I'm not there, so
I will stick by that. I will be watching that episode with popcorn. But I don't really. I mean, if I'm wrong, I'm wrong. I don't care. That's part of being investing. Like,
it's nothing personal or anything.
As an investor, if you're going to make money, people have to agree with you later on. If you're just following everyone else, it's going to be hard to. So I have no problem saying like, yeah, I think this is a scam. I could be wrong, but I have my reason for saying that. And at best case scenario, it's a bad investment. So I would stay away from this and just let it play out. I think they just put up a video today, and it wasn't looking at houses. It was like some old abandoned bank or something like that. You guys aren't helping me here. Like, you should be June 1st. You should have been June 2nd, and you should have had houses you were at. Like, boom, we got this house and we got this auction.
I feel like before they even came out June 1st, they should have already had an investment.
We got the sheriff's sale. Like, we got something. Like, you got to give me something tangible. It's nothing. It just seems hype. And it's just like, you feel bad because, my fear is that someone's going to get burned by this. And then they come to me and I'm like, oh, you want to invest in the stock market? Like, get the hell out of my face. Like, I got burned before.
That's two different things.
Yeah, but once you it's investing.
It is. But I guarantee the person who got burnt didn't do their due diligence. No,
there's no way you did your due diligence. Because, you know what? I take that back because you might not even understand if you did.
Well, if I don't understand, I'm not putting my money in it. Yeah. It's that simple.
Because you wouldn't know a 5.5% fee is high. Like, you wouldn't know.
If I don't understand, or if I talk to you and I'm asking questions that you don't have answers to, I'm not putting my money in.
It's tough because I know emotionally, especially for black folks, you hear someone trying to empower you and lift you up.
That's why I think I like the idea.
You jump in. You gonna want to ask. Well, you ask questions. You seem like Uncle Tom. You should just jump in and don't do anything. So I get that sentiment, and I wish I was rah-rah about this thing, but that's why I'm here doing this. That's how I can help the black community. Yeah. This way we're doing the way that Tulsa real estate thing is set up is I'll keep doing this podcast, giving free information, doing the website you guys can use. But again, people don't want to read. You have no idea how many people have said to me, "Can you make a one-page summary like the report?" Like, it's 4 pages. It's legit 4 pages. It's 6, but it's like 4 after you take out the charts.
You know what you should do?
I'm just not doing it. Like, no, I'm not. No.
Everybody wants like audio books and stuff now. They just want you to read it to them.
I'm not. No,
they want to listen to it.
Maybe I'm not doing
audio.
That.
They want an audio version of the.
Maybe
report.
I'll do that. You know what? Maybe I'll. The thing is, like, when we talk about books or people writing stuff, I think because we see it in paper form, I don't think sometimes we realize how much time that person put into that.
Absolutely.
Book or that report. Like, they put hours. They did the work. Like, it's nice enough to read the 4 pages.
So this guy I know, his name's Dante Vincent. He's a trader. And he has a blog, and so what he does is he writes his blog, but a lot of the content that people like the most, he does video, like he kind of does like a video blog of particular things that he wrote about based on the demand of the people that read the blog. And the good thing I like about that is, like sometimes when you write something like in the beginning and then you go back and you read it again, you actually find out more information, or you can give off more information that you might have forgot. And you're probably more advanced in what you're doing, because, you know, a lot of the ones that I saw were maybe a year old, 2 years old, things like that. So, I mean, I see some, you know, good things about it, like to just do like audio blogs of certain things, like say like your best investment. I'm just speaking for you.
No.
Your best investment, you know, go through what you saw, X, Y, and Z, you know, what made you buy it, all these type of things or whatever like that. So just to give people ideas of stuff like that. So it's okay. Like,
I think would it. Let me see this.
Like that's how people come up with books. Like, like the greatest trade I've ever made, and they like make a book about it. You know, so
but that's
like,
what I wanted. I understand everyone's not as interested as I am. I get that. I completely understand that. But then you should probably be in an index fund if that's the case. Because two, I mean, you're owning a piece of the business. You should at least understand the business.
Right.
That's just my feeling. Like I wouldn't want you to buy something you don't understand. Now I can break it down to simpler terms, but again, like sometimes you don't like telling people. And I know someone else that don't like telling people specific companies that they own because people just buy them to point the finger at them.
Mm-hmm.
I worry. I'm always worried about someone getting burned and then not coming back into the stock market. That's what I try to avoid.
So that's why you give out that much information.
So you understand what's going on. So
totally.
So if you do get burned, you know, like, oh, okay, I understand what happened, or X, Y, Z.
Exactly. It's not just like, oh, I bought this and
because
I told
you said so. Yeah.
That, or you told me to do it, and you know, things like that. And, you know, basically, you give everything out on the table for them. Now you decide, you know, what do you do?
But the thing is, I do have like one-page summaries. I just don't put them because when I originally listened to a conference call, I'd take like bullet notes. I can easily do a one-piece. I just refuse to do it.
See, like, I don't know. I'm like kind of back to like the audio thing that I was talking about. Like me personally, like I like to listen to stuff like, so like when I take car rides or like when I go to work and things like that, I got like a 40-minute drive. So I listen to podcasts. I listen to, you know, investment stuff, you know, interviews and things like that. So a lot of the stuff that I do comes at a time where I probably can't read.
Yeah.
So just based off of that, like it all depends on, you know, like some people read at night before they go to bed or when they wake up. I mean, it all depends. So like I don't know. I always thought it was easier to listen to stuff than to read it. I mean, I like to read.
That is like a trending thing. People are listening more.
Yeah, I like to read too, but you know, I like to listen to stuff. Like I get. It seems like I get more. I'm trying to think the word that I'm looking for. Like if I listen to something besides reading it, I feel like I retain it better. Like if I listen to like a podcast, I feel like I'll retain it better than if I read like the show notes or whatever. Like it just, I don't know, it just sparks something in my brain that kind of gets me to understand a little bit better for some reason. That's just me, you know, like that's just me. Like I listen to audiobooks all the time. So, you know, it's all an individual.
No, that is like a trending thing. People like listening to things more. So maybe I can concede and put that out there. I don't know. But
it wouldn't be like everything. It would just be like, you know, different, you know, whatever you choose to do. Like, like I wouldn't make it like a thing because, you know, it kind of takes away from.
No, you test it out. You put one
purpose
out there and see what people listen.
I was about to say because, you know, who knows? Maybe you might get, you know, more of a following based off of, you know, that or whatever. Who knows? Like, it all depends.
Yeah, I'll think about that. You guys might have gotten me a cave because of Albert. May have. All right. Well, we're up against the hour. You have anything else you want to?
I actually want to talk about something that has nothing to do with trading. The Brian Colangelo thing. So the Sixers finally.
He gets OJ immunity if I'm on the jury. He didn't do it. Nope. No way. Nope. Wasn't him.
So they concurred. No, this is the funny thing about the whole thing. So they hired the the investigative firm that investigated. They did the Deflategate and they did the what was the Spygate. So they have forensic evidence.
Yeah.
To prove that his wife. Yo, that's crazy. They went that far. Like like he's gonna be on an episode of Forensic Files. Like, are you kidding me?
We're getting a divorce.
Like, just because of some burner accounts. Now, don't get me wrong. Like, that's really bad. You know that. Basically, it leads me to believe that he was talking about business that he shouldn't have been talking about to his wife.
But if you have a wife, you talk about
that's fine. But she's supposed to know that she can't say nothing.
Yeah, it's all on her. I don't think he did anything wrong.
Yeah, I don't either. He was being a husband.
Yeah.
He was being a husband, and the fact that he was being a good husband, talking about his work to his wife, and she decided to take it upon herself to start a burner account or 5, and then talk about some of the young star players that we have.
She could have just said like, "Oh, Sixers are good. Brian Colangelo did this move, not Sam Hinkie," and kept it light, and she'd have been fine. When you start giving out like the actual like detailed information that he's telling you that no one else knows,
nobody else knows.
That's when she crossed the line. She did that multiple times.
She did, and it's just this is the thing about it though. I don't think he did it, but it's no way he didn't know about it.
I don't think he knew about it. How would he? I would say that because his wife is older, he probably wouldn't think she'd be on Twitter doing this. Like, what? I wouldn't think twice. My mom was on Twitter, like supporting the podcast, like it was burner account. I wouldn't think twice.
I guess so.
until I heard about it.
But that's just crazy to me. Like, for her to do something like that.
Because he probably was upset, and I understand he was upset because he got here. Everyone still loved Hinkie.
Yeah, they do.
And they still
because the way that he got here. His dad just bullied the Sixers into hiring him. So he probably didn't even want him in the first place.
So he's probably telling his wife that, like, yeah, they make fun of me because my dad got me a job. No one gives me credit because it's Sam Hinkie.
Speaking of that, his dad, he threatened the Sixers if they fired his son, he was going to, like, ruin a bunch of relationships and things like that, business relationships that they have. That's what they said. That was another thing that took the investigation.
Yeah, I heard that too.
Like, that's crazy. Like, is that serious, though?
He's probably insecure. But he tells his wife that.
Yeah.
And so his wife tried to have his back and goes on Twitter and tries to, like, give out information to help him out that he can't tell.
I know. It's a bad situation all the way around the board.
I still would be pissed there. And I am having a conversation with my fiance tonight. You have any burner accounts that you know about? Anything right now?
Well, me personally, I'm not a Brian Colangelo fan. I don't think he's a good GM. I think he got hosed in a Markelle Fultz trade, not because of Jason Tatum's good, but just because I don't think Boston wanted Markelle Fultz in the first place. I think he would have fell to 3 anyway.
Yeah.
Or I think Jason Tatum and Fultz are so even that it doesn't matter which one you get.
Or if you have Ball. If you thought like maybe they take Tatum and then.
Well, I didn't want Ball because he can't shoot, but.
But you're not trading up not to miss Ball. You
would absolutely.
Take him I
mean, I would, but I mean, I guess it was something they probably knew that LA was going to take him. But like, I would have been fine with either. But my thing with Brian Colangelo is, like I said, I don't think he's a good GM, and I'm actually happy to. I hate to see people lose their job, but like for the
I'm
Sixers'
more concerned
sake,
about the other people who came with him.
Well, no, they're still fine. Everybody's good.
They might not be.
Well, maybe when the new GM gets in.
That's what I'm saying. They bring in David Griffin to try to get LeBron.
So right now, Brett Brown's running the organization.
Yeah,
but until further notice, that's probably going to be until after the draft. But I think that the Sixers
I think if they bring in David Griffin, they would do that before, like, free agency at least.
Well, yeah, but not before the draft.
No.
Because all the draft stuff is already set.
Yeah.
They know who they're going to get if they're there. He just makes the pick. The work's been done. But free agency, definitely, you got to have a GM. Because if you're trying to get LeBron, then who better to hire than
David Griffin.
Exactly. So,
but if they bring him in, and all the people who came,
they're going.
So I got fired because your wife couldn't control herself.
That's terrible.
That's a problem.
It is. But
and you gotta think people don't NBA. You gotta move and uproot your family, and this how you lose your job.
Know,
man.
Well, knowing him, he probably won't be a GM anytime soon. So
no, he's not being a GM again
because he was hanging around. He didn't have a job for a couple of years prior to that, so he was just.
I don't think he'll be a GM again.
Me neither. He might be a consultant or whatever. He might
Unless
be
he
helping
really-
his dad with USA basketball.
Unless he really dissed himself from his
Yeah.
wife, and I don't know from the statement he said we're going to do it as a family.
You know what probably happened? He probably didn't want to work here anymore and told his wife to do that.
No, because that was going on for too long. No, I'm just saying if I don't want anything bad to happen, but I can't. Hey, you tell me I didn't see anything because that I would be furious.
Oh, I would have
my
been.
wife.
I would have been hot.
I would've
If
been
I was
sick.
Yeah, I would have been sick. Like, don't have any. Listen, whatever you do, I got to know about it. Okay, I'll tell you how to do it the right way, so I don't get fired.
Yeah, it's not because it's not just he got fired. Like, you're never getting a GM job.
Yeah, you're done because they can't trust you. So it's like the guy who spills the beans in the locker room that nobody's supposed to know. You know, like D'Angelo Russell. You know, telling what the NBA players do on the road. Like, you can't do that. Like you that's like a brotherhood thing,
Yeah.
or like Pusha T telling about Drake's, baby that no one knows about. Like, you got to keep it at basketball, or you got to keep it at rap, or you can't.
I think I think Pusha T was saying he mentioned his fiance.
Yeah, but he didn't mention him in a way like.
Hey, you opened the door to family.
I agree, but I do believe that he would below the belt. But
yeah, they're not fighting like that.
yeah, I mean,
they-
obviously, it's definitely
going
going to be
nowhere.
it's going to be on wax. But you messed that man's money up. Supposedly he had some type of.
he was like release.
Well, he had some type of
Yeah,
endorsement
you
or
about to
whatever.
release the whole sweatsuit line,
Yeah,
like name
yeah,
of his son
so-
and say by his name. Yeah, you messed that all up.
Yeah, so hey, but
It's all fair. All fair.
it is.
No
so
problem.
yeah.
But
That's-
everyone, talk.
That's it.
Watch out for the Tulsa real estate thing. Talk to your significant other about if they have any burner accounts. That's a conversation that needs to happen over the weekend in everyone's household. But that's all I have for this week. I would just say next week, looking out for David Busters. But we're already up against it. I'll talk about that next week.
Yeah.
All right, so I'll put our contact information in the show notes. Also, feel free to ask us questions. Just leave a question if you're on Facebook or if you're on YouTube. Leave questions. I would love to answer them. So we have a little bit more listener interaction. So next I'll be here next week. After then, I won't be there for 2 weeks after that, but I'm here next week. All right. Peace out.
Peace.